Hey everyone, welcome back to Corporate Decoder, the place where we decode the sometimes not so thrilling world of corporate filings. Today we're diving into a report so packed with numbers, you might need an abacus and a strong cup of coffee. Just kidding, or am I? We are going to look at Fossil Group's recent financial shape. It's not just about pretty watches and leather goods, but about dollars and cents that keep the company ticking. It's a story of transformation, challenges, and a quest to get back on the profitable track. Fossil's been trying to turn things around. They had this thing called the turnaround plan, which is kind of like a business diet and exercise program. It involves cutting costs, focusing on what they're good at, like traditional watches, and fixing their money situation, basically strengthening their balance sheet. They concluded what was called Tag, Transform and Grow Plan, and like any good before and after story, there's a claim of success. Fossil says it bagged $180 million in yearly operating income benefits. The company is now aiming to refocus on the core. That means consumers and the traditional watches they love. In addition, they want to be a brand-led company, not something else, and they want to drive channel profitability, which I am not sure what it means, but it does sound important. But wait, there's more. Fossil is doing a strategic review to find ways to cut costs, get rid of some assets, and maybe even borrow more money or sell some stock. It's like they're looking under every couch cushion for spare change. Fossil makes and sells products under its own brands, such as Fossil, Skagen, and Zodiac. They also have licenses to make stuff with other famous names like Armani and Michael Kors. Having those licenses is a big deal, like being friends with the cool kids at school. Let's get to the numbers because that is what matters. For the year, Fossil pulled in $1,145 million in net sales. Unfortunately, that's a big drop of about 19% compared to the previous year. Ouch. Talking about brands, sales of licensed brands accounted for almost half of their sales. Michael Kors is the big cheese, accounting for 17.4%. Breaking down the sales figures, you'll notice proprietary brands accounted for $580 and 89.4%, and licensed brands are at $509.1 million, a similar drop of 19.3%. Watches, their bread and butter, made up about 78% of their sales. So if you're betting on Fossil, you're betting on Fossil, you're betting on watches. Speaking of retail, the company is optimizing store operations. It means closing underperforming stores to save money. In the long term, this should be good. As of December 28, 2024, Fossil had about 5,200 employees. It's interesting to note their diversity efforts. It's an important part of the story, especially as consumers are increasingly conscious of these things. The company has also committed to new ESG or sustainability legislations. It is important for any company that wants to stay relevant. Like many businesses, Fossil notes the risk of future pandemics. It's a reminder that things can change quickly. A big challenge is trade, especially with China. With the US potentially imposing a 20% tariff on products of China, among other escalations, this could make things more expensive. Their retail sales were down and traffic to their stores is still dependent on the malls in which they are located in. So they will need to successfully maneuver traffic and physical store locations. It seems like they had some executive shakeups that can be worrisome. Now, the part that might make your stomach drop a little, debt. Fossil has a lot of it with $168.1 million in outstanding indebtedness, and they have paid $23.8. Many companies, the risk of not meeting those debt obligations are high. To make matters worse, they can borrow even more with the secure debt, which means Fossil is walking a financial tightrope, and there's not much of a safety net with ratings agencies potentially downgrading their debt ratings. Speaking of financials, the last few years haven't been kind. They reported a net loss of over $100 million for the year, and they're not exactly swimming in cash. Currency swings, yep, those can hurt too, making their products more expensive in some countries. Let's not forget all the new laws and regulations, especially around ESG, environmental, social, and governance issues. Staying on top of all that legal stuff is a headache, and messing it up could mean big trouble. If their stock price dips too low, they could get kicked off the Nasdaq stock exchange. That would not be good for their image or their stock price. And let's not forget the big picture, the global economy. If things get worse, people might stop buying watches. It's all connected. The possibility of a data breach always looms. Can't catch a break. They even have a special person, the Chief Information Security Officer, who runs a program to check how secure they are against cyber attacks. The auditors, Deloitte and Touche did give them a passing grade on their financial statements, saying they're presented fairly, but they also flagged inventory valuation. All in all, the results of the past 3 years indicate a business in distress. The company have been suffering continuous losses and do not see a clear path to revenue growth. However, there are a few bright spots. They seem to have controlled losses by tag, but that process seems to be completed. And the company has at least recognized the importance of taking action, from board meetings to the cybersecurity framework. The details of debt are also complex and seem to add a huge risk. Fossil's workforce composition and commitment to equity are also good signs as they adapt for the better. So what's the verdict? Fossil Group is facing some serious headwinds, declining revenue, looming debt, global uncertainties, but it is taking action. It is not a lost cause. The recent changes in leadership and increased focus on financial health might just be the shot in the arm the company needs. Investors will need to be cautious though, as it is a risky proposition. Thanks for tuning in to Corporate Decoder. If you enjoyed the video, don't forget to like, subscribe, and hit that notification bell for more deep dives into the corporate jungle. And let me know in the comments what company should I decode next.